The big Q was the US Federal Reserve's policy decision that was announced last night, and as expected there was no rate cut. But what came as a surprise, and a positive one at that, was that there was no hawkish pivot either. The Fed said that it is still leaning towards an eventual rate cut. In fact, there was no mention of the H word, the rate hikes. For now, it seems like Fed is going to hold interest rates for longer, and when inflation does come within their tolerance limit, the first plan of action would be rate cuts. The central bank also said that it would slow the pace of reducing its balance sheet starting June of this year. That decision ensures that money markets don't experience an episode of volatility and stress as witnessed in September of 2019. Now, this can be considered dovish because, slowing the pace of reducing the balance sheet means that the central bank is keeping more money in the financial system. This approach supports economic growth and aims to avoid causing market instability or higher interest rates. Consequently, bond yields tapered off. The 10-year is now quoting at 4.62%. Remember, on Tuesday, they picked up by about 7 basis points. Last night, they were down after the policy decision. They fell by about 7 basis points. So, for our markets, they are essentially flat right where we left off on Tuesday. The dollar index, now that is back below the 106 mark. DXY, as we speak, is quoting at 105.75. And since yields and the dollar cooled off, gold prices, they bounced back. Spot gold jumped by about 1.5% overnight, and it's back above $2,300 per troy ounce. Gold, remember, has an inverse relationship with bond yields and the dollar index, because higher bond yields offer better returns and a stronger dollar makes more makes gold more expensive for non-dollar buyers. So when bond yields or the dollar index drop, gold becomes more appealing. As for oil, that was the biggest Q. We saw another 3% sort of a drop on Brent crude, and this was again on the back of a 5% correction, of about a 2% correction that we saw in the previous session. So what has happened in the last 2 days? Brent crude has eased by about 5%. Now, as we speak, crude prices, Brent crude is currently quoting at about $84 a barrel. Now, as such, there is no reason to it. Yes, crude inventories and the production in the US, it's on the rise. Yes, there is a ceasefire agreement in the Middle East as well. But let's not forget, the war is not over. I think the fall in crude prices is more of a technical one. Remember, Brent was hovering in that range of about $87 to $97 a barrel for the entire month of April. So once we broke below that key support of $87 a barrel, I think that caused some bit of unwinding, and that's why we are seeing this correction play out in Brent crude.